Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Eeka Fashion Holdings Limited annual report. Eeka Fashion Holdings Limited offers a diverse range of businesses and services. At the core of their operations are the design, promotion, marketing, retail and wholesale of cell phone branded ladies, where products under various brand names such as Courageous, La Courageous, Elsewhere, FUNNY, FELLN, CADIDL, NARSI, NARSILING, and NEXY.co. These brands offer a wide variety of clothing items including dresses, skirts, trousers, shirts, knitwear, vests, jackets, overcoats, scarves, and accessories. In addition to product design and sales, Eeka Fashion Holdings Limited is also involved in trading garments and ladies' wear, fashion creation and design activities, brand promotion, software design, and property leasing services. The company operates a social e-commerce platform called Eeka Fashion Mall, which offers its products through various channels including retail stores, third-party e-commerce platforms, distributors, and direct sales through promotional activities. Overall, Eeka Fashion Holdings Limited's business scope encompasses product development, marketing, sales, trading, fashion creation, brand promotion, software design, property leasing, and e-commerce operations. Eeka Fashion Holdings Limited market capitalization of $5 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Eeka Fashion Holdings Limited holds a significant advantage in their industry. Eeka Fashion Holdings Limited trades at a lower price-to-earnings ratio of 10 times and a higher price-to-book ratio of 0.88 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Eeka Fashion Holdings Limited itself. The company maintains a moderate leverage profile, with liabilities making up 34% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 5.7%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company are multifaceted. One key area is the sales of household appliances and communication equipment, which have contributed significantly to revenue growth. Additionally, service consumption in various categories such as culture, sports, leisure, transportation, and travel has also driven revenue upwards. Another significant driver of revenue growth is the beauty and personal care category, which has seen substantial increases. The company's trade-in program has also had a positive impact, boosting related category sales by RM/0.61 trillion. Furthermore, the rise of e-commerce has been instrumental in driving revenue growth, with online retail stores contributing to an increase in sales. The company's focus on transforming consumer shopping habits and expanding its e-commerce team have also played a crucial role in driving revenue growth. The rapid growth in sales via Douyin live streaming sales model is another notable trend. Overall, these factors have contributed to a 12.01% increase in e-commerce revenue. On the other hand, there are several drivers of revenue decline. One key area is the apparel category, which has seen a decrease in sales. The personal luxury goods market in mainland China has also declined, contributing to revenue loss. Additionally, the company's self-operated retail stores have experienced a decline in sales, from 78.5% to 76.68% of total revenue. The e-commerce platforms Eeka Fashion Mall and VIP.com have also seen decreases in revenue, with Eeka Fashion Mall experiencing a significant drop of 34.69%. The Elsewhere brand has declined by 18.81%, while the Courageous and CADIDL brands have experienced declines of 2.2% and 7.62%, respectively. These factors have contributed to a decline in overall revenue. The net income of the company experienced a decline over the specified period, with a decrease of 14.57% on page 1 and 15.26% on page 23. This trend continued into the next year, where net income decreased by 4.59%. The profit margins also saw a downward shift, decreasing from 7.2% to 6.44% on both page 1 and page 23. The consistent decline in net income across different pages suggests that the company faced significant challenges in maintaining its revenue growth. The decrease in profit margins further indicates that the company's ability to generate profits from its sales was compromised. This could be due to various factors such as increased competition, rising costs, or a decline in demand for their products or services. The slight improvement in net income on page 27 may indicate some positive changes in the company's operations, but it is not enough to offset the overall trend of declining net income and profit margins. To reverse this trend, the company needs to identify the root causes of its struggles and implement strategies to improve revenue growth and profitability. The financial performance of a company can be measured in various ways, but one key indicator of its health is its ability to generate positive operating cash flow. This metric reveals whether a business is capable of producing sufficient profits to cover its expenses and invest in growth initiatives. In the case of this company, the data suggests that it has achieved a net cash inflow from operating activities of Rm555.48 million for the year ended 31 December 2025. This positive operating cash flow indicates that the company is generating sufficient profits to cover its expenses and invest in growth initiatives. The significance of this achievement cannot be overstated, as it demonstrates the company's ability to manage its finances effectively and make strategic investments to drive future growth. With a strong foundation of positive operating cash flow, the company is well positioned to navigate challenges and capitalize on opportunities in an ever-changing business landscape. The company has experienced a significant reduction in its debt level over the past period. Specifically, interest-bearing bank borrowings have decreased from RMB 524,068 to RMB 420,000, indicating a substantial decrease of approximately RMB 104,068. In addition to this notable decline in debt, total current liabilities remained relatively stable, with only a minor increase from RMB 1,773.86 million to RMB 1,774.91 million. This suggests that the company has effectively managed its short-term financial obligations. Interestingly, while interest expenses are not explicitly mentioned in the provided text, finance costs have decreased by 11.74% from RMB 55.51 million to RMB 48.99 million. This reduction in finance costs is a positive indicator of the company's ability to manage its financial obligations and reduce its reliance on external financing. Overall, these changes suggest that the company has made significant strides in reducing its debt level and managing its interest expenses, which are key indicators of a company's financial health. The management of our company is currently focused on assessing the impact of new accounting standards on our financial statements. Specifically, we are analyzing IFRS 18 and have determined that amendments to other standards such as IFRS 9, IFRS 7, IAS 21, and annual improvements will not significantly affect our financials. In addition to this, we are investing in digital marketing channels to enhance brand influence and awareness. This includes online platforms such as short videos, WeChat mini programs, and Douyin, which will help us reach a wider audience and improve our overall market presence. The company's financial performance is reflected in its dividend payments. Over the years, the company has consistently paid out dividends to its shareholders. In 2025, a total of RMB 446,003 was distributed as a final dividend, with an additional proposed final dividend of HK 35 cents per share. Similarly, in 2024, the company paid out a total of RMB 681,027, including both a final and proposed final dividend. The payment of dividends indicates that the company has generated sufficient profits to distribute a portion of its earnings back to shareholders. This practice is a common way for companies to reward their investors and demonstrate their financial stability. That concludes the financial summary for Eeka Fashion Holdings Limited. feel free to comment below, and I will be happy to answer them when possible.